Pakistan is expected to spend $2 billion of the World Bank funds meant for multi-sectoral projects in the country on food, shelter and other urgent needs in the wake of devastating floods. The World Bank's new vice president for the South Asia region announced that the lender was envisaging financing of about $2 billion to help Pakistan strengthen resilience to climate-related risks. The current portfolio has 54 projects and a total commitment of $13.1 billion, the World Bank resident mission in Islamabad said. The World Bank Group's portfolio is supporting reforms and investments to strengthen institutions, particularly in fiscal management and human development. Partnerships were being strengthened at provincial levels, focusing on multi-sectoral initiatives in areas such as children's nutrition, education and skills, irrigated agriculture, tourism and urban development. After a brouhaha over a cabinet decision to allow duty-free imports of bulletproof vehicles for 3- and 4-star retired officers of the armed forces, former Senate Chairman Rabbani has called on the ruling coalition to nix its decision. In a statement issued on Saturday, Mr. Rabbani said he had already submitted a calling attention notice to discuss the matter and seek an official response from the government. The statement came after reports that senior officers of the armed forces would be able to import duty-free bulletproof vehicles of up to 6,000 cc under a policy green-lighted by the federal cabinet, but is subject to the Premier's approval. Faced with severe criticism from all sides, the Federal Board of Revenue clarified that it hadn't issued a statutory regulatory order to allow the import of tax-free bulletproof vehicles. Mr. Rabbani, a former Senate chairman, said the federal cabinet had got its priorities wrong in approving the facility at a time when some imports remain banned for citizens and the floods have put pressure on an already faltering economy. He insisted that if the bulletproof vehicle imports were allowed on a perceived life threat to servicemen, it shouldn't be restricted to only 3- and 4-star officers, as the actual threat would be more vivid for those officers and Jawans who were involved in combat on the ground. Finance Minister Miftah said the International Monetary Fund Managing Director Kristalina Georgieva has expressed agreement with Pakistan's request to ease the conditions imposed on the country under the Extended Fund Facility program. Ismail said the IMF official had also agreed to increase the amount Pakistan would receive in the next tranche. He added, however, that a lot of negotiations were yet to be held with the international lender. The finance minister added that he had informed the IMF of Pakistan's changed economic situation after the floods, the destruction of cotton crops and the difficulties the country would face in ensuring adequate wheat supplies. Ismail said he also held meetings with World Bank officials, adding that the country would receive $2 billion from it this year. Trading opened on the Pakistan Stock Exchange on a positive note on Friday as the benchmark posted an intraday high of 201 points. But the index came under selling pressure soon afterwards. Analysts say the pressure on stocks was a result of the yields on Pakistan's dollar bonds registering a notable increase after Prime Minister Shehbaz Sharif appealed for debt relief from rich nations. Also, the Ministry of Planning's assessment that flood-related losses amount to $30 billion, dismal data for the large-scale manufacturing output and declining foreign direct investment played the role of a catalyst in the stock market's bearish close. As a result, the KSE 100 index settled at 40,620.21 points, down by 307.74 points or 0.75% from the preceding session. The trading volume decreased 13.5% to 164.4 million shares, while the traded value went up 8.6% to $28.6 million on a day-to-day basis. Foreign investors remained net sellers as they offloaded shares worth $0.25 million. The rupee on Friday managed to stage a modest recovery against the US dollar after suffering losses in the last 15 consecutive sessions. The dollar lost just 6 paise against the local currency to close at 239.65 rupees from 239.71 rupees a day earlier. Currency dealers were not sure whether the reversal of the exchange rate trend would be sustainable or not, but they were of the view that the slight decline in the greenback's price was the outcome of market expectations following media reports that the United Nations has appealed to international lenders to restructure Pakistan's debts to create fiscal space for the flood-hit country for coping with the natural disaster. Pakistan has estimated flood damages to the tune of $30 billion as floods destroyed major crops including wheat, sugar, rice and cotton. Sindh is the worst affected province as major agri-belt of the province is still submerged in floodwater. Inflation for the week ended on September 22nd dipped 8.1% compared to the previous week, mainly on the back of a decline in the prices of food items like tomatoes, bananas and cooking oil. However, the sensitive price index was still over 29% higher compared to the same week a year ago, largely driven by food and energy prices hitting record levels in the country. The year-on-year change in weekly inflation was hovering around 16.5% during the week that ended on 14th April, just 4 days after former Prime Minister Imran Khan was ousted from power. However, in the previous weeks, the annual change in weekly inflation was recorded at 40.6% for the week ended on September 15th, 42.7% for the week that ended on September 8th, 45.5% for the week that ended on 1st September, 44.6% for the week that ended on 25th August, and 42.3% for the week that ended on 18th August.